And system sound.
No system sound, bro?
No. Or screen share, by the way.
Or screen share?
Yeah.
Oh, that is, man,
Whenever Cody leaves,
man,
we are
oh
reminded.
man.
That's right. That's right.
Oh, that's just sad. Who is responsible for that one?
Who's in charge here?
Who's in
Who's
charge here?
I
We need to
think
fire somebody just to make myself.
halftime report
There you go,
with
buddy.
technical screw ups.
There you go. How's that? How's it read?
And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report. And those little gaffes in the intros are some of my favorite moments. I don't know why. I just enjoy them so much when we're just sitting there. And then Mark bellowing out again. Another reminder, Mark, you missed your calling. You should have
Coming
a choir
to,
director.
yep, saves the tech. He should have been the choir director.
Dude, one day someone from Tackle will come to karaoke with me and they'll see me karaoke Avril Lavigne's Girlfriend, and you can share it with the whole lot. I rock that song like a diva.
If
I
you
do.
go, so Avril Lavigne, do you do any Miley Cyrus? Do you do some
No,
Miley?
dude.
No.
Miley
Is
Cyrus.
does she have like Breaking Ball chain something?
Listen, I feel
Wrecking
girlfriend,
Ball.
right?
Wrecking Ball,
Yeah.
Breaking Ball chain. There you go.
You've never sounded
Don't you
older in
know
your
I
life.
can do to make you feel all right?
Oh goodness.
Listen. I take it as a point of pride that I can't name a Miley Cyrus song. I do take that as a sign of pride.
But you got there. See, I think you
I
got
got
there.
Wrecking Ball. If I was going to name enough things that go with ball, I was going to find it somewhere.
What about Party in the USA, Matt? You've got to have heard that song, right? That little fun, boppy summer hit
Yeah,
from
Party in the USA, isn't
yeah.
that like the Beach Boys, bro?
No, Miley Cyrus.
Miley Cyrus stole it from the Beach Boys.
Probably.
I just tried to sound older than I did initially, so.
With the Beach Boys reference, I think you can get there. I mean, why don't we bring up Hank Williams the first, or some old.
If you say anything bad about Hank Williams, there
you
will
know
be
me.
fine world.
There's not a chance I would ever do that. He is the father of that kind of music, in my opinion. Welcome out here, guys.
Yep.
Let's get down to market analysis. We got a lot to do here today, and obviously, very, very, kind of important day for a lot of new traders to try to understand what's happening out there, and that's why we're here as veteran coaches to help you break it down, understand the price action, market conditions, so that you can run your daily routine. Now, that's the whole intent of this show. Well, and to come together and listen to Mark sing and talk Miley Cyrus and hang out with you guys out there as Team Tackle. A couple things. Number one, if you're veterans, Team Tackle, write in the chat. If you're new, subscribe, click the thumbs up button, and click that bell. Come back and join us. Volatile day, Matt. Obviously, we're down 3% on the S&P, 4.5% on the NASDAQ. Let's get your first thoughts there.
Oh, I'm still on Miley Cyrus and Beach Boys and Johnny Cash, but my first thoughts, Tim, are we talked yesterday about how there has not been a key intraday technical support level given in recent history, in the last couple movements in the price. And I also talked about how even though we were hesitating, we didn't form that high base, and this was more of an extension of the current trend. And if you have the last 2 days before today as an extension of the current trend instead of a new breakout, today makes a lot more sense than if you had it as a potential breakout new candidate with a new leg. So I do think the analysis coming into that was fairly important, just given the fact that it really was an extension of the previous movement that you had from this breakout of 3,400. And so that, to me, it makes a little bit more sense when you think about it in the entirety of the price movement over the course of the last couple of weeks versus if this was some type of new leg coming into the market that we broke out of here on Tuesday of this week. So it doesn't, any one of these days should never shock anybody. We're going to have them, and we're going to have them more in the future than we have them in the past, given the level of intervention that we have seen in both in terms of fiscal policy and monetary policy. So I don't think anybody should be too shocked, maybe concerned, yes, but not too shocked seeing we get a 3% downward movement in price, given the fact that the NASDAQ's up like 100% in the last 5 months, right? So let's not overreact to the scenario. That's first and foremost. But second of all, I got this now starting that retracement coming down into the moving averages. Let's see how it performs at 34.50. Let's see how it performs at 34.25, right where that 20-day moving average is as well. But the key I think that we need to look at is from an intraday perspective. Remember, a lot of the momentum that had been building over the course of the last few weeks really kind of, post Apple announcement split, post Tesla split, a lot of that euphoria that came into the market that really kind of drove the market up, 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 up. We hadn't seen one of those major intraday support levels get violated yet. And yet looking at this on that, I like the 30-minute chart the best to kind of see the whole activity. And so once you started violating some intraday levels of support, right, honestly, right here, there was nothing really to stop it selling off. And so even coming into the market today, you had a little bit of hesitation on the overnight action. You didn't have that much negative news today. This to me really just kind of smells like a technical sell-off more than anything, where algorithms get triggered to the downside and that continues to sell into the downside as stop losses are blown out of the water, and then the market then finds some type of intraday support level. So I think I do believe that, like many times in recent history, these types of shakeout days, these types of sell-off days, these types of increased volatility days, however you want to categorize it, these do represent some fairly substantial buying opportunities. But like Mark said on Bitcoin yesterday, you don't catch the falling knife, and you certainly don't catch the falling Apple or the falling Tesla. You wait for them to find that support level on the intraday perspective, looking for slowing momentum in trend, looking for double bottoms in trend, looking for violations at that point, not only support holding, but looking for resistance levels from an intraday perspective to break out of. So I think that the old analogy of Marty the elephant is just really, really, really good right now. Marty's bouncing. Marty hit the ceiling. Marty's coming down. He's going to test that support level. Let's see that slowing momentum. Let's see the slowing momentum on the intraday chart. Then let's see those upward movements in price on the intraday chart by violating resistance, showing confirmation here. So anything can happen on a day-to-day basis when you're dealing with this type of volatility. But I would say let's let it play out. Let's let it play out. Let's let it find its support level on the intraday basis, because this day doesn't end a bullish market. These happen. They're normal. Nobody should freak out about it. And quite frankly, as a technician who likes standard technical analysis, sign me up for a standard bullish retracement. Just give it to me. Just give me one of them. Just give me one of them. And if you remember the last time we did this, it was in kind of the moment in mid-June, when in mid-June the economy was really starting to cook. It was really, we were opening up everything. States were opening up. The virus was subsiding to a certain extent. And if you remember the economy reopening up theme, it didn't last long. Okay, but it was a nice little price movement here in late March, or late May, early June. You saw that come up, 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 up. You had that shakeout day, and what happened? Well, on that shakeout day, you saw the slowing momentum followed by the upward movement in price. You eventually got the double bottom, and then you saw that price appreciation that created a very, very, very good trend. So don't position yourself to in any capacity that you might miss out on what transpires next. So let's focus on the intraday chart. Let's focus on that double bottom on the intraday chart. Let's focus on the slowing momentum on the daily chart. Let's let technical analysis do the talking here. Let's not overreact to the news media. Let's not overreact to anything that happens in Twitter or Facebook or the political type atmosphere. Let's look the technical analysis do the talking, and Marty's still coming down. Let's let him find support before we look at this as that buying opportunity. But I do believe it's time to prepare for that buying opportunity so that we don't miss it when it happens.
You know, the sensationalism you get out of media is obvious. It's not just in financial markets, across all different types of media as well. But Matt, you know, if you read the headlines today, you would think that the whole market is crashing. You know, it's like,
It's funny. It's cute. It's so cute. The end of the world is transpiring because the S&P is down 3% after it's up 60% in the last 5 months. Okay. Um, no, these days are not new to the market. They're just not. And so let it shake itself out, let it find its support, and then let's fly again.
hmm hmm Mark, how do you approach a day like this? Obviously, distribution by the end of the day, the volume is probably going to be a little bit higher than the average. I would always almost be assured of that. You know, obviously, we're down 3% on the S&P. The Nasdaq is seeing a little bit more of a decline. Just general thoughts here, Mark. How are you approaching this right now, and what advice would you give people out there?
Well, I mean, you know, you knew a shakeout day was coming. I mean, anybody that's watched the halftime report for the last week and a half, like, is it happening tomorrow? Is it happening 6 weeks from now? You would never know that, right? But you knew a shakeout's coming just because you've been around a long time, right? Whenever things get overextended and things blowing off the top and you're at ridiculous valuation levels, you just never know when it's going to end. And so you don't try to predict when it's going to happen. You just prepare for it. And so, like, now that it's here, right? It's here. You know, what Matt said about interday support developing is going to become very critical in the coming hours and in the coming days. It's going to be very likely, because we see this after shakeout days, and we got a lot of computer algo things what happen on shakeout days on a lot of charts and a lot of different things. Things can get like, it's going to be a crazy couple days. I mean, is it going to spin out of control and go down another 5%? I don't know. Is it going to like rally and go up 5% tomorrow? I don't know. All I can do at this point is look for technical signals to form some kind of tested support level. That's all you can do, because once you get into this shakeout, high volatility, crazy, man, it really can be a crazy couple days until something forms. Like Matt was saying, whenever you do not form support on the way up, and we saw this with gold, 3 weeks ago, and there's no real intraday support, man, things can get really violent really quick on the way down because there's nothing stable. You know, things were going so far, so fast, and I know it feels like it never ends, but like, this doesn't surprise anyone really that's been around a while, because this is just the normal, very normal price action when you don't form support on the way up. It's one of the things why 2017 was such a beautiful trend, because it was slow and steady and a little bit here and a little bit there and a little bit, and it constantly formed those technical patterns. We didn't get that in particular over the last few weeks. Technical levels on the Qs, because that's what I'm most concerned with, is the Qs, just because the tech heavy, and, you know, it's been tech leading this rally. It is looking at, I'm just pulling up my own chart here. We have that old breakout level at 275. So 275. I mean, if it came down to there, that would be a logical place. Another logical place right above it, it's the 20-day moving average, if it can hold. But that general range, I wouldn't be surprised if we get a little extended volatility over the next trading session or two to see the market make a stand, because this isn't listen, we might have a systematic collapse one day. I don't think this is it, right? I don't think Matt thinks this is it. I don't think you think this is it. You know, when I look at my chart, I don't see a sea of red. I see a lot of red, obviously tech getting obliterated today.
Well, down days like this, everything's going to be down for the most part, right? But it's a percentage down. But what is this, like the 457th most volatile day in the market in the last 10 years?
Yeah, seriously.
Come on now.
But like, when I woke up this morning and I saw that, you know, we were down a little bit, and then it accelerated afterwards, you saw strong price movement and this stab by the powers that be to try to push up dividends, to try to push up the reopening plays. And some of those companies are still up. Some of those companies are still in the green today. So this is not like we've seen. I mean, you saw it in March.
Can I ask
right?
you guys a question?
Mhm.
And I want to get both of your take on it. A standard retracement in the marketplace is 3, 4, 5, 6, 7 days, correct?
Yeah, sure.
Yeah.
Okay. And a standard retracement in the market is 38 to 61% against the previous upward movement in price, correct? I won't draw the Fibonacci for
Okay,
you, Tim.
fine.
I'll just
Yes.
give you the percentage
Fine.
retracement.
Sure.
You
Yeah.
can't deny a standard retracement is 38 to 50% of the previous price movement.
Sure. Okay.
Even if you want to hate on Fibonacci, you can't deny that's
Uh-huh.
an accurate statement.
Yeah, let me draw.
All right.
Quick.
So, well, you can make up stuff if you want. I mean, that's fine too. But okay. But what we've seen in the market is we've seen prices go up and up and up, and then we have these shakeout days that we call them a shakeout day, and they're a little bit more volatile than normal, price action. But could that be in the future kind of that standard retracement where you get 1 to 2 days of very volatile action coming back down into support ranges?
I've been thinking about this actually for quite some time, Matt, because in the broad market conditions, obviously, we have this, we've had conversations internally about how just the general bear markets are going to be swifter, sharper, and more severe. But that's on a big picture level over the course of years and years and years. Even
I
on
think
the
it could be
swing,
happening on daily charts too, though.
it's a good question. I mean, we're seeing it anecdotally this year already. I mean, if you think about June on the S&P 500, you had the one real red candle. I know there were three
Yeah.
red candles.
Yeah, but the
but
other two were doji based.
it was doji, big
Yeah.
sell off, and then consolidation, right? Even with like gold here recently, it's not like we had this real traditional retracement. It's like little hesitation,
No hesitation,
big candle,
big pop down.
then the big pop down. So it's the nature of markets
Well,
in
and
some regard, but it's happening quicker in terms of patterns. I would agree with
you know,
that.
and in the S&P 500, that example I was giving you here, yeah, you had a little hesitation candle, but you only had that one big down day here,
Mhm.
and then it just seems like everything in the market is just a little bit faster than historically it was.
Mhm.
And that's nothing new to the market. That's market mechanics 101. I mean, markets speed up over time. But it just seems like some of these downward movements in price, when people are waiting for those standard bullish retracements and they get a slowing momentum candle followed by a big downward, followed by another follow through, followed by a slowing momentum candle, it seems like these retracements traditionally that, a lot of us grew up on, right? A lot of us grew up on this standard 3 to 5 day bullish retracement coming down into a rising moving average. It just seems like those retracements that were standardized for a good 15 straight years, it seems like those are getting quicker in this market condition. And is that something that is just unique? And I'm not saying rhetorical. I'm trying to figure it out. Is that something that is just unique to this market condition because of what we're currently going through with, the COVID economic situation, the response, the recovery, all of that jazz? Or is this something that is more algorithm based, that is something that technical systems need to be updated for the future? I'm personally trying to answer that question. I think you have some evidence, right?
Well,
but is it just conjecture more than anything else given the unique situation?
I don't have a definitive answer for you, but I'll give you two charts. One, you don't even have to move. You can just look at the shakeout day in early June of this year. And then you can look at the gold chart on the shakeout day from a few weeks ago. And I've seen anecdotal evidence on this on smaller stocks, because while we haven't got it on a lot of stocks you follow, I follow all the garbage in the market, right? Like those garbage, dollars, the Hertz and the Genius brands and the
Yeah,
stuff.
for some reason you geek out on following garbage.
On the Nicola, on the stuff. And we've had lots of shakeout days in there. And I've been trying to study the algorithmic patterns of shakeout moves, like in the Kodaks and stuff like this, to see if there is some kind of pattern. And I'm not going to draw on that but we got two main shakeout days on broad markets or on a major instrument in gold and on the S&P in early June. And what you've seen in both of those in the following week, and they both had very, very similar pattern: volatile shakeout day, and then a trading range develop in the couple weeks afterwards. And so that is what I'm going on. I think your question is a good one. as far as in the future, once we get more evidence following shakeout days, because if the markets become this violent algorithmic based strong moves up, strong moves down, and if that's the thing, I mean, we need to recognize a new pattern.
Yeah, and I'm not sure, like I'm not there yet. It's just
Oh, yeah,
something
no.
that I've been seeing a little bit more in this current market cycle post pandemic. I've been seeing it a little bit more in terms of us not pricing in any risk, any risk, any risk. And then all of a sudden on that one day where it's like, oh my goodness, you know, the market violated a support level, there's nothing there to hold it up. And so we don't price in any of the perception of risk, and the markets go up and up and up and up. And so it's a combination of not pricing in risk, markets going up and up and up, not creating a strong support line, strong trend line, strong intraday support levels. And so once you don't price in the risk and you just go up and up and up, once those violent shakeout days come in, it's just like, it's a combination of not pricing in risk, creating a euphoric condition where you don't have strong technical support levels. And so it's just something I've been noticing a little bit more. And I'm certainly not there yet in saying, okay, we need to update standardized technical systems, because this it literally could just be unique to what's been happening in the last 3 to 5 months, right? I mean, that wouldn't shock anybody to see a more normal market condition similar to what we saw in the last 10 years than what we've been seeing in the last 5 months, you know, in 2021 and moving forward. So it's just something to keep an eye on. But I will tell you, on these violent shakeout days, and I don't even want to say violent shakeout day. I mean, it's 3% down, right?
Mm-hmm.
You know, in this 3% down after a 12% up, that's a better way to say it. I'm looking at this as a buying opportunity. Now, I do think you have to focus on the intraday here. I don't think you can focus on the daily nearly as much. I think you have to focus on the intraday. There is not a lot
There's
of
no
strong
support.
There's not a
There's
lot of
no
strong
support on the
support
left-hand side of
levels.
the chart.
And that's the problem there. It's not one of those scenarios where we can look back in this short-term chart and be like, well, let's look at, yeah, I could give you anecdotal evidence at 34.40, and I could give you a little bit of evidence at 34.20. But those, I mean, nobody would be shocked if those were blown out of the water, and nobody would be shocked if those held. I think we got to focus on the intraday price action, see slowing momentum on the intraday price action, see that support level start to form in real time, and it might hypothetically coincide with something on the daily chart, but I don't see anything remotely strong on the daily chart until you start getting into that 3,400 range, which is still another 58 points down.
Mm-hmm.
No, I mean, two thoughts. One, if the patterns of this, if the broad market shakeout in early June and the one in gold holds, and this one behaves like those two, what you saw and what you're seeing in gold is a couple weeks of some back and forth until a range develops where you have a resistance level, where you have a support level. It's like that's, you know, and so if what happened in June repeats itself and what happened in gold repeats itself, I mean, you could see this range develop over the next 2 weeks where something's tested it again, things go back and forth. And my second thought is, and it's the only concern I have, and remember when we did the bear market thing a week ago, Tim, you're like, what's your worry in the short term? And my only worry in the short term wasn't anything economically based or fiscal or policy based. It was that you had an algorithmic, fear-based, margin overextended technical sell-off. So my only concern, and this is why you don't catch a falling knife and you wait for something to develop, because a lot of patterns have been blown up, right? AMD's pattern got blown up. A lot of patterns have got blown up right now, is that if heading into this, people were over leveraged, and you know, not our tackle trading members, because we try to teach as well as we can, but you know, there's millions and millions and millions of other traders that don't listen to us. Maybe they should. Is that if you have a condition right now where people are over leveraged to a tilt coming into this, right? They're weathering the storm. Maybe they're selling a little bit. And I'm talking about the cumulative effect of traders everywhere. And that's my worry. And this is why you don't catch a falling knife, is that hey, one punch is fine, but another punch, and all of a sudden this cascade of selling occurs, right? As you know, margin calls come in. I mean, we've seen that happen before. It's what happened to gold back in March. Nothing was wrong with gold. There was no fundamental problems with gold, but accounts were over leveraged. They were pushing it too hard. So that is one of the concerns I have in the short term, which is why I'm going to be very, very careful in anything I do. And is because if people are over leveraged, a violent technical sell-off is a possibility coming off of this red candle. So as Matt has emphasized several times, and I think it is the critical point moving forward, those inter-day support levels that form in the coming hours, days, and next week are going to be very, very critical. And if we get one that gets tested and then tested again, right? It's the psychology of it. It's you test and then you test again, and the bears have a chance and the bulls have a chance to capitulate, but they don't. All of a sudden that support level is going to become really, 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 really important. So
I'm with you on all that. Now I'm distracted. Hold on. We've got to do something here, Matt. Caption contest. Team Tackle out there. What is he saying on the phone? Can you give me that image again?
Call the PPT there.
You know, caption contest, like an old cartoon skit they would do in the newspaper and whatnot. What is my man Mnuchin saying on the phone right there? That was quite an image. You know, I'm with you, Mark, on all of those fronts. And by the way, I do remember the conversation about how you were concerned about a little bit of a technical sell-off here. But then we also, this week, we've been talking about, guys, I mean, at what level would you not be interested in pullbacks? I know we only got 3% here today. Let's say you carry this over with another 3% tomorrow, which I'm not saying is going to happen. We got an unemployment report tomorrow. We got all kinds of things. But so, I mean, so what, quite frankly, what are you going to be, 3,300? The rising 50 is going to be coming into play next week. I understand, especially, I saw a comment earlier in the chat. I completely understand, you know, on a day like today, somebody being concerned, because I think any trader who's bullish, like, okay, you got to figure this out, right? You got to problem solve what's in front of you. I saw a new trader say, hey, I'm only 2 months new to trading. You know, the last 2 hours feel like forever to me. Do you remember the first time you ever saw a big technical sell-off market? You brand new, 2 months into market, 3 months into market, and then you had to deal with it. I mean, that is a different learning curve for that type of individual, right?
Well, it was actually, for me, it was the opposite day because I was really new and I was short. And it was a ferocious 3-day bullish rally in which I was short into. And your head spins. You feel like your whole world is collapsing. You feel like all of the hopes and dreams you ever had for the future, which were just alive 2 days ago, and how financial freedom and retirement and I'm a master of the universe, are all of a sudden smashed, and you have this huge despair. And it is absolutely, and I don't care who you are, unless you are a stone cold psychopathic killer, it is very, very rattling when you have not experienced that first big punch in your face. So the emotions you are going for, and this is so important because so much of trading is psychology, and we probably don't spend enough time collectively as a trading community talking about the psychological elements of trading. But so much about trading is being able to control one's emotions, especially when things are not going as well as humanly possible. Now, a lot of that, as you trade, and I don't know who the trader's name who said that, when you get 6 months in and you get a year in and a 2-year in, you'll plan for these things a little bit in advance. And so on these days, they still create an emotion, right? Like my account's down today. I don't have any bearish positions. I'm in the red today. You know, there's a genuine emotion being.
I would like to find the trader that's not in the red and has still been making money in the last 2 months.
Yeah, I mean,
very rare today, probably somebody who quickly maybe hedged or something, but no, it's not.
No, if you've been riding the bullet over the course of the last 2 months, you're red today.
And so, like, I've been doing this a long time, Matt, Tim, Gino, Noah, we've all been doing this a long time. So I'll just call you new trader 2 months since I don't know your name. I'm feeling emotion. You feel emotion that never goes away. because I'm a human being. You're a human being. That emotion goes away. But the newness of that motion and having dealt with that emotion previously many, many times, you are less prone to make knee-jerk mistakes on the day that results specifically from the emotion. And that's where you want to get to a point. I'm losing money today. You're losing money today. You're going to have days you're not going to make money every day. You accept that as a trader, but you do not want to do things in the height of the motion that are a knee-jerk reaction. You want to plan that out. And maybe, let's say you didn't have a plan coming into the day. Well, guess what? The trader market is not open 24 hours a day. Tonight, when you're there, come up with a plan that helps you when these days occur, that motion's still there, but you're a stone cold robot and you are just executing your plan. You're not getting caught up in the sweep of the day. That's the best advice I got on that.
You know, I believe, and I think anybody that's been around the market believes this as well, that understanding the psychology of trading and the psychology of investing and the psychology that we have around just our human behavior around money are vitally important concepts that for someone like me, I loved what you just said, Mark. Absolutely loved what you just said. And I think it needs to be said more. And I think we should talk about it more openly as a community, right? But the problem with a lot of people is they just don't want to even have those conversations, right? They just want to be, what are you buying and how are you going to make me money? When our philosophy has been and will always be, it's not about today, but it's about the next 5 years. It's about the next 10 years. It's about what you're doing in the future. And a lot of that is quite frankly, 15 years into this, I still have those same emotions. I still have those same conversations. I'm a little better with it now than I was back in the day. But I think it takes a lifetime to really master the concept of money, because that's where the emotion comes from. The emotion comes from money. Yeah, secondary emotions of wanting to be right and not wanting to be wrong, but it really is just that emotional response we have to making money versus losing money. And it goes back to that theory we've talked about many times called prospect theory, about simply how we as consumers behave around making money versus losing money. And quite frankly, I don't care if people find us for the first time like, oh, just get more back to stocks, get more back to stocks. No, that's not why we're here. We're here to help navigate this market in general, not just making money every single day, because anybody that's active in trading knows that. But I do want to get back to the analysis a little bit here in what you and I have been talking about, Mark, in these support levels from an intraday perspective. When you're looking at this, just to make sure people understand what I was talking about, focusing on those smaller time frames to see the momentum, you do have support ranges on an intraday basis. You have one right here about 35.35. You have a fairly significant run right here at about 34.85. You have another one right here about 34.68, and I can go back and back until you find that support level on the daily chart, which really isn't until you get to 3,400. Okay. So the daily support level that you're really looking at is the breakout of that all-time high, that $3,400 breakout, the one where we basically were pegged to 3,400 for about a week and a half straight. That's that daily support level that you're really kind of looking at ultimately, as if this market is going to stay in the same degree of bullish mentality, it has to hold the all-time breakout. Can we all agree with that? If you're going to maintain the bullish just fever, 3,400 has to be maintained.
Yep.
What's up?
And Matt, not only is that massively critical for the overall sentiment, it cannot be understated. And that doesn't mean that the market's going to crash if it doesn't to like
no. You're just looking at a different support level at that point.
But Matt, almost every breakout level in the last 4 or 5 months has held. You go back and you look at the breakout level after breakout, even after the shakeout day, you had that breakout of 2,900 where it cleared. I mean, you look at that like, oh, I wish I could highlight it on my chart. But along the way, like after the shakeout day, it came down, tested it a few times on the way up. Every breakout level has found a test, support, test, held. If 3,400 doesn't hold, that breaks a continual pattern that has been developing. And it could mark, not necessarily a downtrend, but it could mark a period of
hesitation on the buying.
Hesitation, because that is such a key technical thing. Buy at support. It's an algo thing. It's a huge algo.
Well, and I do think it's psychologically as well, not just technically. Technically, it's a very, very significant level, 3,400. But I also think breaking out of that all-time high and maintaining that all-time high is psychologically important as well. But when you're looking at this based on what I was talking about earlier, and you're looking at from an intraday perspective, I'm going to drop the time frame down to more of a shorter time frame so we can see the volatility shift here. And so basically what you're looking at on those key levels of support I talked about, well, the first key level of support was right there. There was no hesitation here. There was no hesitation. You're not looking at buying this when you have momentum coming into it. The next level I identified on that 30-minute chart on an intraday support level was 34.85. That was right here into this time frame right there. There was no hesitation. And even when the market was trying to recover earlier on in the day today, about 2 hours after the market opened, where did this retracement come right back into? Right into that old support that didn't hold, now acting as a new resistance. The next level at 34.68 was right into that this range right here. You violated that again. This market hasn't slowed down at those key levels of intraday support. In fact, for the most part, those levels have been violated, not with slowing momentum, but increasing momentum. And now when you're focusing on these intraday levels, yes, you look at the history and you try to get an indication of where those levels can form, but it's very, very important to lower that time frame on the technical chart to really see when those support levels hold. And could this support level at 34.40 that is starting to form, could it ultimately be that level that decides, okay, this is where the market finds support and starts price appreciation? Maybe, but you need to see the data. You need to see the evidence there. And so what would you have to see here to indicate that slowing momentum? You'd have to see a double bottom. You'd have to see a double top. You'd have to see that slowing momentum. And then you'd have to see it violate now one of these areas of resistance that it is starting to form on the intraday perspective. So to me, yes, you're seeing this as a shakeout day. You're seeing this as a continuation of the previous upward movement in price. You're looking at that old resistance channel at 3,400 to act as that support level, but it could form anywhere between 3,400 and 3,465 where it currently is. Just don't hope it does it. Don't blindly bet on it. Wait to see it and then take action on it.
Mm-hmm. Gino, I see you popping in here.
Hey, is that microphone on? Is it working?
It sure is, sir. How you doing today?
Yeah, doing great, man. How you doing?
Gino, we're talking about markets, obviously, and we're talking about context and breaking down things on an intraday level and really truly understanding the technical levels that you're looking at when you see a red candle like this today. Talk to our group out there, our team out there. You know, a day like today, I mean, if you are a new trader, a veteran trader, whatever it is, you've got emotions around a red candle, obviously.
Right.
But how do you approach this without the emotions? How do you just focus on what you're seeing, execute trading plans? What advice would you give?
Well, you know, we in the lounge today, we're talking about this. What's the trend? Based on your trend rules, what are you seeing? You know, are you still bullish on the what do you call it? Are you still bullish on your trend, your levels? Like for me, I use the 20-day moving average. I use higher highs, higher lows based on our system. Still bullish trend. It's just a pullback. And it's a very aggressive pullback, by the way. But when I dug deeper into it, what are the stocks given the biggest pullbacks? Well, you start in the sectors, right? And looking at the sectors right now, what's interesting about this is if you keep up with the sectors, which you really should, is our best sectors the last few months has been technology, communications. And if you dig deeper, it's semiconductors and your big communication stocks like Apple and what have you. The worst sector for the last couple months has been energy. Well, that's completely flipped and reversed today. We got technology down 5%, communications down 3%. That's the biggest pullback, right? Guess who the only strength is our worst sector, energy, which is flat. So it's a switch from strength to weakness, but actually what it is a profit taking. We haven't changed trend really on anything on the sectors. Therefore, until I see a sector breakdown, I'm not going to fret. And by the way, this is common, big pullbacks right before a big news event. Big news event, what is it? Tomorrow, non-farm payroll. Everybody's eyeing unemployment because truly for the economy to get back on its feet, we need jobs created. We want to see the outlook, we want to see what's going on. It's always a big number, first Friday of the month. And then we go into a 3-day weekend, right? Go into a 3-day weekend.
That's right.
So you're going to see a little fear there. But, this isn't just a normal pullback, Tim. You look at the dollar, it's doing the exact opposite, which I'm sure you guys already looked at, right?
No, we haven't seen the dollar yet. Nope.
Exact opposite. It's doing a bearish rally, hitting its head on the 20-day moving average. And that's a turning point, It's still bearish, but can it break through and start going more bullish? And these are called contradictory or contrarian indicators. My biggest focus, and I'll get back to the markets, Tim, but my biggest focus right now, since I am an option trader, this is where I see the big news. It's kind of what I saw last week is, have you looked at the VIX? The VIX is scary move today, right? You don't usually see a spike like this on the VIX on just a pullback. I mean, the VIX, I don't know if you guys are looking at that or not, but it is pretty good spike. I mean, usually you see this when the market breaks down, not, just a pullback. So I think a lot of it, and we talk to thousands of students and thousands of traders every week, all 4 of us and all the coaches. And we talk in depth on our Friday meetings. We put together our awesome watch list, our stock and options report, which is a pro member access only, right? Our stock and option report and the students' feedback, we got I can't believe how many questions we got on what are we doing with the stock split Apple? What are we doing with Tesla? What are we doing with, those are big names. I mean, they're the biggest companies in the world right now. And, when you look at that, they're a big influence on the market. So how much of this VIX is based off of Apple's big 6.5% drop today after its big drop yesterday? That's a big influence. I'm just wondering if you took it out of the equation, would things look a little bit differently, So that's my take on it, Tim. Well, I was actually going to talk to you later about this. Like, what do you think about this VIX? What's going on?
Mm-hmm. But even like Apple, though, I mean, to me, the VIX, it's an open-ended question. I don't want to dive into it here today because I don't think anybody has the answer. I mean, I see the VIX spiking. We've seen the VIX spike before. In fact, in June, it spiked to 40 and then it faded for 2.5 months in a row.
Right.
So I'm not going to overthink it while the market trends are intact, because what will happen to the VIX if the market stabilizes, the VIX will come back down.
Right.
The only way the VIX keeps spiking from here is if you have some other kind of structural sell-off. I mean, but on the Apple thing, I mean, it's a thought, it's a question. I get it. But Apple's up 40% since the beginning of August. So 6% on a day like today. I mean, I get all of these questions. I think the biggest risk
kind of works both ways, doesn't it?
Yeah.
I mean, without Apple's 40% upward movement in price, the market's not up at the highs.
Mm-hmm.
Right.
It works both ways. You can't get to the point where you're like, oh, everything going up is because of me, but now it goes down, it's something else. As of right now, guys, this is a downward movement in price. Let's focus on it as a buying opportunity until the evidence suggests otherwise.
Yeah, and
when I asked the question earlier this week, I was dead serious about the VIX. What is the VIX trying to tell us, if anything?
Oh, I mean, we talked, and if you're new to our show today, we don't talk about the VIX very often. And we spent a good, 15, 20 minutes on the VIX the other day.
I think we broke a record for sure.
Because something very unusual happened. The VIX hit the highest point ever since 2000. The day the bubble burst in 2000, it hit its highest point ever, highest level ever at an all-time high since that day 20 years ago. That is obviously noteworthy, right? And we spent a lot of time on a increasing VIX as stocks went up. I mean, obviously there is a ton of option buying that has occurred over the last few weeks. I mean, you see the numbers, the option, the call buying, and it's all been skewed. You are at like the call put skew ratio is at an insane level.
Yeah, 1.6.
Like people just pounding into calls, pounding into calls, pounding into calls. And obviously, when you have a shakeout day like today, there's going to be a lot of movement. It's going to increase the VIX.
Oh, those individuals that all they do is buy call options, they got slaughtered today.
They got slaughtered today. They got slaughtered.
But there's a lesson to learn there. When you're paying premium for an option contract, and you are paying premium for option contracts, you better be right.
They're expensive right now. You
better be right. And it's hard for me to look at the VIX and see anything other than just the market telling all these new participants, if you want to play, you're going to have to pay to play.
That's all I think it is. I think you've got this rampant speculation in the market by a lot of traders,
especially on the call side.
Yeah.
And we've been trading options for, 2 decades. But here's the thing is I look at the option prices. When you have a position that you trade all the time, whether it's a covered call and you're selling calls all the time, you start going, wow, I'm getting good premium this month. Mm-hmm. You kind of see that, wow, this must be some volatility out there. Or you start selling calls. Like remember on silver, we're like, God, you get a nickel for a month out. There's no premium there. That's low volatility. But when you see the VIX, which is on my charts, you go, okay, there's some selling opportunities in here. So now the question comes to, okay, when I look at the option statistics, and we did this in the lounge, we looked at the put call ratio. Usually the puts, there's 0.75. That means 2 puts or 3 puts bought for every 4 calls. There's usually more calls traded, but today it's 1.6. In other words, there's 1.6 puts bought for every call traded. So there's definitely, in fact, it's 500,000 puts traded today and 300,000 calls. So there's a lot more put trading today. Now, here's the thing.
People are panic buying protection today.
Yeah, that's what you think. Yeah, so I dug deeper into it, and some of those, that's just the volume of puts. That's not telling you if they entered on a bid or ask. That's just telling you it could be a bull puts. It could be a credit spread. It could be selling puts and they're still bullish. But just the fact that people are shifting over to puts, you got to look, is it on the bid?
We can reasonably assume they're hedging. I mean, I get that.
Yeah,
they're hedging.
Panic buying protection.
They're hedging.
The biggest risk, in my opinion, is something I actually saw earlier. I don't want to lose this thought before I address it. Nick said that, he's here. He's tackle trading, member, team tackle. I see Nick all the time. He said, I have friends who are still buying more out of the money calls on stocks like Tesla to try to catch up on their losses.
Oh, my goodness.
Oh, okay. So when you hear catch up, okay, there's the clue. When you hear catch up on their losses.
Where did you hear that, Tim?
There was a comment in the chat. That's one of his buddies.
That is on
that's good.
Tilt.
That's a good indicator. Because
when you got on tilt, if you saw it at a poker table, they would be bankrupt in literally 30 minutes.
Hey, visit Mark Justice in 1998 after
he would have taken all your money and it'd feel a lot worse. It'd feel less worse than it does today.
Listen, you have to be able and willing. And listen, I've been gambling my whole life, poker, sports betting. The times where I've gotten myself in trouble is when I chased a loss.
Double up to catch up, baby. Let's do it.
Yeah,
YOLO, baby.
No, and I've shared this story with you before. The worst decision I ever made is I had won 27 straight poker sessions, right? Just on a nice little roll. I had a $200 loser one night, and I was pissed because I wanted to keep the streak closing. Where did I head? I headed to the pit, and I headed to the craps. I woke up 3 days later in a different state, almost nearly broke, chasing that $200. Mm-hmm. So, you got to you have to, if you want to succeed at this game,
right,
you have to be able to take a loss.
Take a loss. My goodness.
Yeah. Last night, Mark, we had a great class on journaling, and it was the power of journaling. We are analyzing a journal we did of 253 trades, and it was good because we could sort out how do we do on Apple? And we found out, Apple's one of my favorite ones to trade. It wasn't my best trade. It was actually the VXX. My VXX was my best out of 200 different stock or 100 different stocks. Most of my trades in the VXX. Now, it's not my funnest to trade, but it's my best trade. And then I looked at one of my worst ones, Bed Bath Beyond. Now, I like to trade Bed Bath Beyond, but I like to trade it so much. Even if I lose, I'm like, you know what? I really want to win on it because I just love Bed Bath Beyond and Best Buy or whatever. You can't think that way. You got to find out, what am I good at, and stick with it. So if you're good at trading some stock you never really participated in, like, for example, even though I don't have any Apple products, I'm good at trading Apple, whatever. I don't have any T-Mobile, but I do better at T-Mobile than Verizon. Or you got to go with, hey, I'm good at this. And the journals told you that. The journals said, now when it was all said and done, my favorite kind of trading is swing trading with long calls and long puts. But guess what my journal told me? I'm best at position trading with credit spreads by far. That's my bread and butter. So, I have to focus on what I'm good at. And unfortunately, you got to face the news. I'm not a good swing trader with Apple. That's just what it is. So it's hard to be like, this is what I want to do. And what really hurts on that, and you guys probably see this, is we hear all the students talking about stocks that are in the news. They feel like they have to trade those ones hitting new highs, the ones that are in the news. And I get it, man, because the news makes you feel like, hey, I'm listening to the news because I need to be plugged in, and they're talking about Apple and Tesla all the time. What am I not doing right? Why am I not in that stock? It feels like if they're not talking about my stock, I'm in the wrong stock. So there's a lot of misleading stuff out there. So how is it possible not to get emotional? How is it possible not to be influenced by the news? So you got to be careful. You really do. So focus on your watch list, not the news. But yes, do not chase a trade.
Yeah, no, I'm with you on all those fronts there, Gino. And we're really talking as experienced traders here that have learned a lot of these lessons. And Mark,
Right.
even from your story there, I'm guessing you learned a lesson from that, right? Like
you can only learn a lesson from a lot of trades. That's really it.
Yeah. And by the way, Gino, I got a lot of good feedback on your webinar last night. I have not caught the recording yet, but I'm looking forward to it. A lot of people, even Patricia here in the chat, said class was awesome. So great job on that. We love those Wednesday night events. Let's keep flashing.
Hey, can I ask you guys a question very quickly?
Yeah.
What percentage of people in general prefer to swing trade, but if they actually did proper journaling, they would be proven to be better position traders?
Oh, probably.
That is a great point, Matt. That's
The majority.
Okay. So in our journaling, we have a spot in our journals that we have on Tactical Trading. By the way, it's free to our pro members. You guys, if you're on a trial, jump into the journaling, download it so you have it, and give it to your friends, because we decided it's so important to journal that we're going to give it to traders because you can actually learn from it. But we have a place in there where you can put not only day trades, but you can also label your trade as a swing trade, position trade, or an investment. And we even have other. Now, other would be like earnings or a strangle or some strategy that you're not playing direction. You don't know when you're going to get in or get out. But once you identify, and what's the rule I taught last night? You have to have at least 50. Hey, thanks, Gino. Gino Broly was at my class. There's more than one Gino out there, guys. Isn't that scary? So check this out. You have to have at least 50 trades. And then what's the rule after that? You want to look at your journal and test your numbers every 25 trades after that. And every 25 trades. So what did I do? Last night, I let the team, the class of over 65 people, tell me where to move my stop. We adjusted my stops on swing trading. We perfected it. I even perfected my trading after 22 years by looking at a journal. And guys, if I'm doing it, you definitely got to do it as a beginner. So it was really, really a cool class. And yes, Matt, I'll tell you, you've got to nail down where you're good at. People do not want to day trade because they think it's too much work. But what's funny is nobody mad at a trade that they made profit in one day, right? They want to day trade if it's profitable, but they don't want to day trade if it's risky.
Well, that's
So,
of all trading, though. I mean, to answer the question that Matt asked about position trading versus swing trading, a lot
yeah,
of people who are very analytical and technically driven, Matt, I think can be sharp swing traders, right? There's different emotions around it, though. I think if people truly understood the position trading mindset and kind of took a more casual approach to the day to day, manage their position, proper position sizing, let the trend work, man, it's a smooth way to approach the markets. I actually really like it myself personally. I've been doing a lot of position trading for a long time, and I think even in these market conditions, position trading during that trend. I mean, guys, we had a 2.5 month trend into this candlestick here, right? It's not like you couldn't have caught and rode a lot of these trends really well to the upside. I personally think position trading is a little easier approach once you're properly trained. Mark, what about you? Swing or
No,
position?
I love position trading. I think a lot of people, listen, position. I think, and I think there's part of it is a personality thing too, right? I'm a little more conservative, a little more patient, a little more willing to wait for technical pullouts and breakouts on weekly charts and that. And position trading just really fits my personality better. But it's not that you can't be really, really successful swing trading. People do it all the time, but it's just finding. This is a great conversation.
That's a big question, Mark. Like Mark, Tim, we all go through the same school of thought, and we taught at the same schools. Can you really break down? Because I got that last night many times. What is the difference from day trading, swing trading, and position trading? When you say position trading versus investing, there's a fine line there. How do you define it? Because I already did mine last night. How do
Time
you?
frame on chart.
Mhm.
Usually, you can be in a position trade for years,
Right.
like literally, and you
As
can
long
be
as the trend stays
as
intact.
long as the trend stays.
That's it. So doesn't it really depend on what your sell signal is and how long you're in a trade? So for me, a day trade is almost always under 24 hours, right? It's almost always within the same day. I'm in and out, tight profit targets, tight stops. And I'm usually almost always on a day trade using intraday candles. So it's going to be a 5 or 15-minute candle, almost always on the entry. I'm not going to day trade with a daily candle unless it's a breakout and then I put a stop, but a stop's going to be on a 5 or 15-minute candle, right? So day trading is very simple to define. Swing trading is pivot to pivot. Whether it's a day trade, a weekly candle, or a daily candle, it's pivot to pivot, but you're definitely using a daily chart. So you get in on a swing, you get out on the next swing. Position trading, my definition, which is a little bit different than a lot of people's, is I have a channel, I have a trend line, whether it's a 20-day moving average or it's a trend line I drew, my stop loss stays below that. It's not looking at swings. It's just staying, hey, if it's bullish, I stay in it, whether it's an RSI or whatever you're using. So again, it could be years that I'm bullish, but I don't usually take it through earnings. So my position trades very seldom over 3 months. Then investing, of course, that's a whole different thing. Sometimes I'm not doing stop losses. I'm going for yield and covered calls. So knowing which one and separating those really is one of the first steps of our step system. That's very important that you define that right out of the gate.
Mm-hmm. Matt, what is your definition of day swing and position? Because you are one of those types of people that words matter. It's got to be specific. So how do you define it?
I define it very similar. Day trades, you're in and out within the same day period time, within the same 24-hour period. You're typically looking at, a combination of a, 1, 2, 5, 15, 30-minute chart. You're focusing on intraday analysis. You're focusing on daily 24-hour cycles, market opens, cash open, ramp coming into closes, bank opening trades, those types of scenarios. Swing trading is standardized pivot to pivot trading from a technical perspective, where the average time frame in a trade is typically between 3 and 5 days. But it honestly depends on the pivot, right? Pivot can go 3 weeks, 4 weeks. I mean, it just really depends on the strength of the trend and the time frame of the trend, but it literally is pivot to pivot. Position trading, I think you're trying to take advantage of trend analysis more than anything else. You can talk about seasonality, you can talk about rotations, you can talk about the different analysis and strategies we take in that, but you're really looking at trend trading. You're looking at identifying a trend, staying in that position until the trend changes. And not even on today, a position trader would be out of the market based on what I said yesterday. In terms of what we saw yesterday is the continuation of the previous upward movement in price, and not a new pattern, not a new trend. And so you're still saying, as a position trader, you're saying, as long as that 3,400 level holds, I'm staying in, because as long as that 3,400 holds, you have a higher high, higher low scenario. And so as long as you have that pivot high, pivot low scenario moving up, you're walking up the steps. You're not going to get shaken out on any one day. Whereas swing traders would obviously have got shaken out regardless of whatever their stop loss was today.
Well,
So
if they didn't get shaken out, they're not swing trading.
if they didn't get
Yes.
shaken out, their stop loss placement was way too much. They took too much risk on the probability side. So, it really is just based on, trend analysis versus pivot to pivot within a trend.
Mhm.
So if a standard trend is higher high, higher low, a swing trader is trying to get in on either the breakout or the retracement and trying to, pinpoint where that next higher high is going to be located. Whereas the position trader simply says, I'm not going to micromanage the trend. I'm not going to micromanage stop loss. I'm not going to micromanage entry. I'm not going to micromanage scaling in, scaling out, all of those things that swing traders do. I want to be in this position as long as the trend stays intact. And a lot of their analysis will be done on daily charts, but they also are keenly looking at the weekly chart as well.
Mm-hmm. Mm-hmm. Love the answer.
Swing traders, I really don't
dedication.
care about the weekly chart.
Yep. Several things we got to break down here in the markets as we're working through. And obviously we love having everybody coming out and hanging out with us on a daily basis. If you're out there, I do this about once a week, and it really gives me a lot of joy just seeing where everybody's from. We got some new members in here today, some new people watching for the very first time. In the chat, just tell me where you're at right now, where you're located, what city, what state, where you at out there, what country. We've got a global audience, a lot of people all over the place, and we do love our team tackle as we're breaking down markets. Matt, a couple economic data points that did come out. The manufacturing number, ISM non-manufacturing, came out in line. The unemployment claims number did come out. I win that discussion from yesterday. I said under a
loved
million.
how you just made that assumption, but okay.
Declarative statement. There's no question about it. Did we learn anything from unemployment today? I mean, the jobs numbers tomorrow, that's the big one. Did you learn anything? What was your takeaway from it?
Yes, I learned one thing today, that in any type of environment, there are forces that will manipulate certain economic data points. And something happened in the labor numbers today that we do need to talk about. The labor numbers came in fairly positive against expectation at 881,000 on initial claims. I know that's a big number, but in comparison to the last 4 weeks of averaging over 1 million, it is a slightly better number than that. The initial expectation was 955,000, so you did beat on initial claims. Now, the one thing I'd like to get Mark's take on, and your take, Tim, is they made some revisions to how they handle initial claims this week in comparison to what has been done in history. They are now doing something, and I don't know exactly what the detail is, but they are doing something in the lines of removing seasonality from initial claims. And so if you take into account the same methodology that they did last week, the week before that, the week before that, the week before that, the week before that, and so on and so forth, it would have been 1.02 million, which was really in line with what we saw last week, and kind of has been par for the course with what we've seen in the last 4 weeks. And so, yes, we did revise the way we see the labor numbers from an initial claims perspective. We are removing some degree of seasonality from that. I need to dive into the data and the detail a little bit more, but without the adjustment, you're really in line with what you saw last week and the week before. And here's the problem. They didn't revise the other ones. And so it's really, really, really difficult to look at the 881 and say the labor market is actually improving when you didn't revise the old readings to the new methodology, when the old methodology would have been a continuation of this stagnation we've seen in the last 4 weeks. And so positive number, if you just take the number for what it is, I'm seeing this as par for the course.
Hey, Matt, I'm looking at my trading account. You know, in September, I'm going to take away in my trading account all of
Yeah,
the
I just
positions right now that I'm
remove the
losing.
bad ones. Yeah,
If I
remove the
sold
bad ones.
puts in September 18th expiration, I'm going to remove those from the calculations, and I'm only going to calculate my profit loss on other days. And it makes the loss I'm having today look much better.
Kind of like the CPI report that the Fed uses. Hey, listen, let's not track, education cost. Let's not track food cost. Let's not track energy cost. Let's only track these segments of the market that are not as volatile, i.e. they go up faster in cost. So let's not track those things that are massively, massively on consumer spending. So the number looks a little better that justifies my dovish monetary policy. We see it all the time. I've said many times that I don't trust Chinese economic data because they manipulate their economic data. And I don't know why we're doing this as much as well, yes, I do. I'm not going to put the tinfoil hat on today, but I understand why we manipulate our economic data. But it's to the point where, like, I don't trust the jobs numbers we get. They changed that algorithm just a few weeks ago, or the way they kind of compose that to remove, if you'll remember, from a contractor status, and they were also not identifying people that were furloughed. And Mark, what did we say at the time? We said, oh, just wait till they don't get their job when they get unfurloughed, right? And what are we seeing now, a few months later? Them not getting their job. So I don't trust the labor market numbers. I don't trust and I've said this for the last 2 months. If there's anything in the labor numbers I trusted, it was initial claims. But even now, initial claims, I mean, how do you even trust that data, to be perfectly honest?
Welcome to the United Communist States of America. It is an absolute.
It's ridiculous.
I got to figure out
what
the actual change does. I got to know a little bit more.
It makes them look better.
It makes the number, Tim, all you need to know is it looks the numbers. It makes the numbers look better.
They made changes so the numbers look better than they are. Those other people still got laid off. They still filed jobless claims.
Well, and Tim, what do you need to know? Is this the first year we've had seasonality in the labor market?
Well, their claim, I don't know enough about it. Their claim is, from the Bureau of Labor and Statistics, is that they've been miscalculating the data in the past.
Oh yeah.
Now
so
this is the more
miscalculating all of the data in the past, but let's not revise the data in the past. Let's just use the new standard moving forward so that the new standard looks better. It's guys, it's
all I know is
out. You got to call it out. This is high level political manipulation, and it's completely and utterly bullshit.
I miss Ronald Reagan. I miss the America I grew up in.
I miss Volcker. I miss Reagan. I
miss Volcker. This, oh my gosh, we have to make everything as good as possible is making our country weaker and weaker and weaker every passing year. And I don't care. Yeah, you guys can go cry for Biden.
To the point where if we get a 3% downward movement in price, the plunge protection team has to be called up, and we got to get the bat signal out there.
Learn to take a punch, America. Learn to take a punch.
Yeah.
We're all precious little snowflakes that have to remove any negative data.
Yeah. What are you looking for in tomorrow's report? Because obviously
nothing. There's absolutely nothing I'm looking for. There's not one thing, positive, negative. I won't trust the number.
The numbers don't even
have to dive in to truly understand the labor market. You're going to have to dive in deep to understand what they're calculating and what they're not calculating.
Yeah, I don't think you can trust the numbers, obviously.
Well, and Dina, I know historically we like to look at Ronald Reagan from a trickle-down perspective, but I'm not sure Ronald Reagan would have exactly supported what trickle-down became.
Yeah.
So I don't blame Ronald Reagan.
And I'm not even saying I miss Ronald Reagan from a political stance or that. I just miss the America.
The truth. Saying the truth.
When things went bad and we're like, all right, we got to fix this. And when things were good, it's like, all right, good job, America. And I missed that where I grew up, where it was like you had to work hard and nothing was going to be given to you. And like, hey, things are really bad happening. Let's do something as a country to fix them. you know, where Tip O'Neill, the Speaker of the House, would dine and be buddies with Republicans. I mean, it seems like a foreign world, but back in the 80s, the Democrats held the House the entire decade, and they got lots done, and they worked together. And, you know, it was just a much different world than whatever this has become today, which is a
we run the risk of sounding so old right now.
I was going to point this out.
So old right now.
I don't mind though. I don't mind.
But no, I mean, Tim, to answer the question, I don't know what the takeaway is from the labor numbers. The labor numbers are widely being manipulated right now, and the initial claims, which we had grown to trust, now that they're revising it and saying, well, this is the new standard, that's fine. If you want to make it the new standard, I have nothing wrong with that. I don't have a problem with that. My problem is, why don't you revise the old numbers? Because it wouldn't be that hard. Why don't you revise the old numbers? We revise economic reports all the time.
GDP gets
all the time.
revised all the time.
GDP gets revised 3 different times. GDP gets
that
revised.
Part I don't know.
I don't that's the part I don't understand is, okay, change the way you see it. That's fine. Have a new standard. Standards have to be updated, but you can't take anything away from this unless you know exactly what the revised standard would have meant from the past perspective. And as of right now, at least initially, even though they have a new standard, it's the same number. If they would have if they would have maintained the old standard, you would have had 1.02 million. So Tim, you can claim victory, and if you need to have the government manipulate economic reports to claim victory, that's fine.
Makes me think of a quote from the great Judge Judy. Don't pee down my back and tell me it's rain. You know, so it is what it is. Let's flash through the markets here for a second. Crude oil next, if we can, back on the charts. Crude oil, trying to find a little bit of a candle here that's interesting from a hammer perspective. You got to zoom in on the chart to even find anything on that chart because of the volatility back in the day. Matt, I feel like this is kind of moving more into a very, very difficult consolidation from that breakdown on moving averages. Probably a more casual observation, just say neutral. Where are you at on this one?
You're neutral by between 40 and 44.
Yeah.
This is really simple to me.
Yeah.
You are neutral between 40 and 44. You're negative 40 at the 40 level. You're positive 40 at the 44 level, and you're looking at a breakout one way or the other at this point.
I mean, and this is the only thing I have to oil, because I don't have anything as boring as can be, is that one of the things you see on true systematic problem days where there's true fear and everything is collapsing and all that, oil gets hammered on those.
Oil would not have bought up intraday.
Oil gets hammered on these days, and it's down 3, 4, 5%. You see that, and you got like 150 in the last 10 years cases of that. So the fact that oil's not selling off, this is technical, this is shakeout, this is over leverage, this is all of that. You know, it doesn't mean it can't get ugly tomorrow. You know, you just don't know. You know, it can get ugly for a couple days. But once again, as Matt started off the program with, this eventually leads to a buying opportunity. It's just positioning yourself and waiting for the technical setup for that to occur.
Gold next here, Matt, if we can. I saw a comment earlier in the chat saying, oh man, at least, you know, if the stocks are down, I would at least expect gold to be up. But on days like this, that's not always how it works.
No, on days like this, you get shakeout, you get margin calls. So no, I mean, it certainly does give you a little bit more, hey, I like gold, right? And gold, unlike some of the other, you know, commodity spaces, you know, held its support level right there between right there around 1920. I was not, you know, I typically will read the news, and I know I'm a little bit different, but I typically read the news and digest the news of the day before I ever even look at charts. And on when I saw the market down, and initially the market was only down about 0.5%, but as the market volatility started, you know, increasing, I at no point was I thinking, oh, gold's going to skyrocket today. It's just not. It's usually not on days like this. It usually takes a couple of days. But what I was looking forward when I came into the chart and was analyzing gold from a charting perspective, my only thing that I was looking at today was if support was going to hold. That was the question for me on gold today. Was support going to hold? And support, at least early on, has held.
Yeah, I think you got to like the price action in gold if you're a bull, don't you? I mean, support is holding. You're only down a hair. The markets are down 4%, and you're only down 0.5% on a day where people are taking profit.
Consolidate another month.
Give me,
Oh,
I
yeah,
Consolidate another month.
I
Do
could care.
absolutely nothing. And I know that's weird for new traders to hear. Do absolutely nothing on gold. Just get it out of the mind's eye. Get it out of this Bitcoin versus gold debate. Get it out. Just let it consolidate. Get it out of the social conscious for a month. And then all of us that actually care about this financial instrument called gold, let's all get ready for that potential breakout.
I agree. Support
So
down
the
here.
question is, what would you do based on a trader if this breaks that double bottom at 178?
Well, I think it's blasphemy to short gold. So I would do nothing and look at accumulating gold at 1800.
See, yeah, that's a investor mindset, right? But as a trader, I don't know. I mean, I don't like to trade gold to the downside. I agree with you.
We really don't ever talk about trading gold. It's either position trading it or
Right.
investing in it. And so once again, like go back to a weekly chart. Look where a previous breakout, which Matt, when Matt talks about 1800, that's the previous breakout level. You had
Yeah.
3 months of consolidation where gold went back and forth, really clear, identifiable range. That would be a support level that would be naturally formed right above that resistance level. It would be a good, if you have missed on a gold run, I know people that hold gold are like, I don't want it to go down to 1800. But if you've missed out on that run, that is a logical place for gold to make a stand.
Yep.
This is the thing about new people that are getting interested in gold. Long-term investors in gold, they don't care about the price appreciation, to be perfectly honest with you. They don't. They look at it as if it dips, fine. I don't care. I'll buy more. That's how they handle it. They handle it as an old value play, dollar cost averaging. They're holding for a long, long time. They could care less about the daily fluctuations. So no, I don't ever look to actually hedge gold. I'm not going to hedge a hedge. Just not going to do it.
No.
I don't look to hedge gold. I don't look to put a stop loss on it. I really don't care.
No, I'm with that.
It's one of those positions where I'm just glad I have it.
Yeah.
Yeah. No, I would look to accumulate more, Gino. I don't trade gold to the downside, so I would just look to add to a position.
It would become more technically challenging if that support level is violated. It would, no doubt about that. So I just think from a technical perspective, I want this support level to hold. I think that breakout of 2000 is going to be really strong. If you do break 1900, it does throw the weekly chart technically into a tailspin.
Yeah, but then you got new levels that you're going to be testing into and all that kind of stuff. I mean, part of your gold thesis, if you're out there as an investor, Matt, you have to be ready to act at different price levels as you accumulate, right? I mean, support here at 1900 is currently holding. If it breaks,
well, it's always in trading and investing. It's always if A then B, if B then C.
Yeah.
It's always that way.
Yeah, I'm with you. Last one, Gino mentioned the dollar. We don't got to look at that again. I
Dollar's
do want
boring as hell.
Bitcoin did break that little support level though, and we were talking about that through the week. You got some major levels down here in the 10 to 10.5 range. There's old support, old resistance in here, and you're hitting the 50-day moving average. I have the same philosophy around Bitcoin in terms of position trading. I'm not worried about a day like this, to be honest. It does not bother me, Matt, though, but that is a very, very sharp candle, and short-term support did get broken. How do you read that chart?
Head and shoulders violating of the neckline, now trying to find support. The 50-day moving average certainly can act as support, but I don't see the evidence in how Bitcoin handles any of these moving averages. I mean, Mark, just in terms of your view, I know moving averages play such an important role in your trading and your analysis.
Right.
How do you get a read on moving averages at all on Bitcoin?
Listen, moving averages work more efficiently in an orderly market. I don't use moving averages on Bitcoin. I don't use moving averages on Roku. I don't use moving averages on Nikola. I don't use moving averages on Kodak. These absolute wild childs. I like the wild childs. They dominate an increasing amount of my watch list. Love them because volatility's high and action's crazy and all kinds of fun stuff. Never a boring day, right? But you got to match the tools with the stock or the trading instrument's personality. And with Bitcoin, Bitcoin's a wild child. Support and resistance tend to be a much better signal as far as that. But man, it's just a volatile wild child, right? And so it's almost like you have to develop, if you're going to trade Roku and you're going to trade Kodak and you're going to trade Bitcoin and you're going to trade these wild childs, you got to just study, develop, backtest, trading plan, theorize, and treat them differently than other trading instruments.
Mm-hmm. Mm-hmm. Some individual company news I do want to get to here today, on the back end of our show. Obviously, the big picture stuff is the most important. We will be here tomorrow to analyze any market reactions. And then just a programming note, we do have a 3-day weekend coming up. I mean, does that change the way you're approaching the end of this week, guys, at all?
I didn't realize that there was a 3-day weekend until yesterday.
Yeah.
Listen, like on a day like today, because I bet you out there, and I think a lot of people are going to relate to what I'm about to say. On a day like today, you look down on the clock and you're like 2 hours and 4 minutes. Just get through this trading session so I can regroup, strategize tonight, figure it out, because like for me, today's punch, don't like it, but I can take it. If I got hit with another punch like this, I got to have a plan on what I'm going to do because, with my naked puts, it's going to probably involve rolling out and down in time. So I got to formalize that plan. So if I do get another punch, I know what I'm going to do. But like right now, it's like 2 hours and 3 minutes. Like, just get through this damn day. Like, get through it right now. Right. So I'm sure a lot of you out there can relate to that right now.
Sure. Some company news, Matt. There was one stock that grabbed earnings. There's actually several that did report. One that grabbed my attention, though. You had the CrowdStrike earnings numbers. Is that right?
Yeah, I did get CrowdStrike's earnings numbers here, CRWD here. I know CrowdStrike very popular in their, their cybersecurity space. CrowdStrike came in and this was one of those companies that was front run coming into earnings that we've been talking about recently. They came into 3 cents a share versus the expectation of -1. Their revenue came in at 199 million versus expectations of 188. They saw an 84% increase in revenue year over year, and they also increased guidance.
Mm-hmm. Mark, this was one of these momentum stocks that were, on your radar for a long time. It ran up into the earnings. First of all, is this a company that you have on your watch list long term?
It is actually. Well, I mean, I like CrowdStrike, and I don't even trade it that much or do anything with it. But I have it on my watch right now because I think it's one of those symbol stocks of the market right now. Huge, massive, multi-100% increase, right? Trades both with tech and sometimes a little bit with that Chewy Peloton Zoom, even though it doesn't fit perfectly. But trades with that group, there's a lot of correlation with how it trades. So I follow it. I don't know the company fundamentally as well as I should, but it's one of those symbol stocks for me. So I use it to almost just to track price movement of what different groups are doing on any given day.
Mm-hmm. Matt, there is a notable thing with their earnings reports over the last couple of years. They were negative PE ratio, negative PE ratio, negative PE ratio. They're now just starting to get profitable here, even just with a 3 cent quarter. I mean, do you have interest in this company, Matt? Is this one that you'll watch?
I have interest in this space. Yeah, I do have interest in this space. And CrowdStrike is a good company in this space, but no, it's not mine. But I do like this. I do think you should have some emphasis in this space moving forward. Tim, in terms of their earnings numbers, we've seen these earnings numbers quite frequently in this quarter. And I'm not sure there's a strong takeaway here in terms of if the CrowdStrike represents anything to the broader trading community. Because I've seen these level of numbers, very similar EPS, very similar revenue numbers, but a really substantial beat on year over year, quarter to quarter revenue, followed by an increase in guidance. And I have seen those numbers get gobbled up by the market and just blow off top type scenarios, right? So this is a little, in terms of the performance in earnings season in general, this is a little surprising that their big increase in guidance, their big increase in year over year, quarter to quarter revenue was not gobbled up to the same degree, but CrowdStrike did drive up a good 50%, or excuse me, about 33%, front running their earnings. So the only analysis I think you could probably take away was they had to impress. They were fairly impressive, but not to the point to justify what has been happening in the last month and a half of CrowdStrike. So I felt their numbers was decent. I really liked the beat on quarter to quarter. I think the most impressive thing was not in their numbers, and it was their increase in guidance. EPS numbers and revenue numbers were really just mediocre here. So to me, decent report, but with it priced to perfection, obvious profit taken here. And if you're a fan of CrowdStrike, you're seeing this and you're reading this as a potential buying opportunity to see how CrowdStrike handles that 9 EMA, how it handles that intraday level of support right there at 130 that, on the gap up 2 days ago, it kind of pinged in that 130. When it started selling off yesterday, it came down into that 130 level. And now you're currently just kissing in a Morningstar doji type, candlestick formation at that 131, 132 level. And so if you like CrowdStrike, you're certainly going to find the numbers to justify your appreciation of CrowdStrike, especially on the quarter to quarter revenue numbers, the increase there, as well as the forward guidance. If you're a fan of it from a technical perspective, you like to trade it, you're really looking at that 130 level saying, okay, let's see how the 9 EMA, how that 130 level handles, because this could be a buying opportunity in some type of swing trade mentality.
No, I mean, CrowdStrike is symbolic of so many tech companies, right? Growing company, right? Bright future, right? I mean, yeah. Just a question of valuation. It's like Zoom. What is the difference between Zoom at 300, 450, or 387 where it's trading right now? It's growing company, right? It's just when you get into these nosebleed valuation numbers, these bubble type valuation numbers, listen, it's a different game, right? And you're like, well, is somebody going to buy it even at higher valuation? I mean, from a trading point of view, we don't care. But from an investing point of view, I mean, that's really concerning. So great company growing. It's just, what nosebleed valuation number are you willing to pay from an investing point of view?
Yeah, in the space, cybersecurity, man, I'm with you. Interested. Mark, I understand valuation concerns, and it has been a hot stock. That move into the earnings is still really where my curiosity comes in. I can't wait to, whenever you do get that data, Mark, I'm excited to hear what you have to find in terms of these run-ups into these earnings reports, because that one,
and I'm not just looking at the run-ups coming into earnings. Do we see a trend develop in the run-ups followed by a post-earnings sell-off? I'm also interested in that.
Yeah. And if the market wasn't down 5% today,
it's not research, is it? No, it is not a day. It is a day to manage. It is a day to deal with the problems if you have them, and then, like you said, wait for the bell, and then
my cats are looking at me like, when are you going to feed me, mother? Like, when are you going to feed me? Like, I'm like, listen, 1 hour.
Mark's like, become self-sufficient. You feed yourself. I got business to do.
When that market bell rings, you'll get fed.
That's right. That's right.
Hey, I just stepped away real quick. I'm back. I heard about CrowdStrike, and that's on my watch list too, because, futuristic stock, cloud computing, that kind of thing, looking into it. You mentioned also, I heard you say Peloton. Who said Peloton? I caught the tail end of that.
Oh, nobody said Peloton.
Because that somebody mentioned it.
Oh, I just was saying the group of stocks though.
Oh, okay. Because I was just saying they're coming up on earnings too. And that's when you got to be careful of. Did you see that chart? I mean, Peloton.
Take a big.
So, I mean, that's an attractive run, right? I mean, you compare that to Apple. So, I mean, going from $20 in 6 months up to $100. Now, here's the thing. I was just talking to somebody about this who was trading it, and they're like, should I get out before earnings? Now, I just want to hear your answer on that. I said, you know, my answer was, I think you should definitely get out before the economy recovers and this becomes the most expensive coat rack that people ever bought. Because as you know, with exercise equipment, what usually happens to it? Like, you know, your Bowflex, your whatever it is that folds up and goes
It doesn't revolutionize the way we see everything in terms of health. That's what
all of a sudden it's like, God, this thing's in the way, but it's a good place to hang my coat, right?
Yeah, like most people, it's in the basement somewhere.
And Matt, Matt, you've said it several times, and I've agreed with it. I mean, we just don't buy the Peloton thesis.
I personally don't. I have no interest, and I've missed out on the entire run, and I'll miss out on the next run too. There's, in a world that has a lot of options to trade, you don't have to trade things you just fundamentally disagree with.
That's right.
I just don't buy the thesis. And even if I just don't disagree with it, I don't buy it. And that's critical.
Yeah.
Mm-hmm.
What about the shake weight, Mark? You got to buy the shake weight.
Ridiculous.
You don't have to leave your chair, man.
Last one for me here today, Matt. Actually, a couple of them. Facebook's not going to be doing any new ads the week before the election. I did see that. Pinterest also joined in.
Facebook non-news story. Thank you, Facebook. You're not taking political ads the last week of the election, and in the last week of the election, you're also not going to be allowing people to go out there and market that you might get the virus if you go vote. So thank you, Facebook, for doing your absolute minimal as a member of our society.
Yeah.
Hey, Zuck.
Get the hell out of here, Zuck. Seriously.
Seriously, you're not a good human being.
But you're a Zuck apologist.
He's also not a good American.
Listen, I'll have the Dark Lord Sith manage my company that I'm investing in if I think we'll make money. I see some people invest with their values. I don't. So like I can say Zuck's trash, but still invest in Facebook and trust him with my money. So I separate those two things.
Fair enough.
But if you don't, I totally admire that. Actually, I wish I was more like that.
No, I understand how people have both perspectives on that one. Last one here for me.
I'll trade Facebook, but I won't invest Facebook.
That's right. Costco, Matt, we talked about the American consumer with Visa yesterday. Costco also confirmed 13.2% rise in same store sales month over month. Had a nice little report there, obviously selling off with the market selling off. The consumer, even without this stimulus, guys, the initial data we're seeing in the month of August, they didn't slow down yet. Maybe there's an assumption they're going to get something in September or whatnot. I don't know, but I have a hard time ever betting against the American consumer was my takeaway from that.
Tough candle here, though. To me, this massive bearish engulfing candle on some news, I think it's got to remove Costco in the short term, though.
Yeah.
No, and this is going to be and coming in because every Friday we gather as a group of coaches and for our pro members find setups. One of the particularly challenging things is like a day like today blows up so many patterns. So it's going to be really, really interesting.
No, we got our work cut out for us tomorrow, and I quite frankly, I'm excited about it. It stays like this where I think trader skills, or it's moments like this where I think real traders, you find out who the real traders are, right? And so, I'm more excited for the scouting report meeting tomorrow than I have been in weeks.
And if you are not a pro member, we do this every weekend. And if you want to see what those setups that we go out and collectively as a group of almost a dozen coaches find, go to the store page at Tackle Trading and sign up for a free trial. You can email me at team@tackletrading. I'll do the administrative work for you. But it's a good time to be a pro member, right? Because if we're entering a more difficult than just smash the buy button environment, I promise you our expertise out there and the work we do finding those setups, aside from all of the hours and hours of education we provide, it's a good time to get out there and start a trial membership.
Mm-hmm.
Yeah. And you know what? Another thing is talking to the students this week. So this was a tough week because there was a lot of breakouts to new highs, and that's been happening for a while now. But real quickly, how many of you got stopped out, got whipsawed, or just stopped out from your watch list? Just so you know, it's good to have a team and other traders to talk to because you're not the only one.
You're not the only one.
No, and it's nice to know that. Sometimes you're like, God, what did I do wrong? What did I do wrong? Listen, it happened to everybody.
It's very simple for me. It's like Mark said. Guys, Americans need to learn how to take a punch. It's how you respond to the punch. Traders got punched today. Let's see how people respond.
So
And
how am I
it's
going to
not
react next?
doubling the amount of options you buy chasing.
No, that's not.
loss.
That's not
Oh,
the
don't
response
double
you
down.
should have.
Max
No,
loss. See, when I Max loss hears those type of things, he gets giddy. Oh, you don't think Max is going to have a few things to say on Monday?
Yeah, go find him. Find Max Loss. We want to hear him.
Well, and I get it. Beginners that have not committed to education, they're going to continue to make mistakes. If you're out there and you've been making mistakes or you don't truly understand your trading plans or education, I'm with you guys. You got to commit to education first. There's no question about it. We see these stories in these times, Mark, where people, they get over leveraged, over speculating, all that kind of stuff. There's anecdotal, stories that will kind of make you hit the brakes a little bit out there. So if you have made mistakes in the past, we're here to help you. That's the whole point of education. I will say, based on that though, I did have one last news story that did grab my attention. It was on the Robinhood app. I don't know if you guys saw this. The SEC is looking at fining them for selling their order flow to dark pools again.
To Citadel?
Yeah, pretty much. Yeah.
Wow, really?
Yeah.
Didn't see
that.
We don't have time to get into it, but the selling the data to Citadel and other type companies, I wonder if that would radically change the easy price upward structure. It's like a whole 40-minute conversation just theorizing it, right? I didn't see that news headline, Tim. Because
the fine is only going to be like 10 million, Mark.
Oh, then they'll still do it. Never
So,
mind.
here's the thing. When they IPO, Robinhood's probably going to be like an $8-10 billion company. I don't know what their current valuation is. You slap $10 million fines on stuff like this. It's like
the SEC fined Elon.
They have made $271 million year to date on selling data to third party black
SEC
holes.
way to take a freaking stand. You guys seriously
Are you kidding me? And it's not just Robinhood, guys.
Oh,
TD
no, it's not.
Ameritrade does it. E-Trade does it. Scottrade does it.
Well, never mind.
No, Robinhood does it more. So when we're talking about the percentage of how much money, oh man, it dwarfs what the other brokers do, Mark. Dwarfs what the other brokers do.
It's a 30-second conversation instead of 40 minutes. Nothing will change. They'll continue to do it.
No, this is a broker thing. What they're getting hit on, guys, is not selling the data to third party. And when we mean selling the data, guys, we're talking they sell your data and then to Blackpool hedge funds who front run the trading data. Okay. Now, how this is illegal from a moral, ethical perspective is beyond me. I don't understand the justification. They try to say that it gives the consumer more efficient pricing. That's their justified. No. You get last in the order flow. That is a nonsense, ridiculous thought process that, oh no, us making 271 million selling your data to dark pool hedge funds. No, we're giving you better pricing because of that. I can't believe anybody actually believes that. That is ridiculous. It should be illegal. You should not. This should be a privacy type situation. But they made 271 million, guys, selling third-party data, and the reality is it's not going to stop. What they're getting fined on is not selling third-party data. What they're getting fined on is not disclosing that the fact that they sold that third-party data previous to 2019. And so they're not getting fined for anything they did this year or last year or anything they've done in the last 2 years. They're not getting fined for anything other than their failure to disclose the privacy concern all the way back in 2018. So we're not even talking about 271 million and a $10 million fine, guys. We're talking $600 million and a $10 million fine. And it doesn't eliminate anything that Robinhood has done in any capacity. In fact, it encourages Robinhood to do more of it than do less of it. I don't know why anybody would trade a Robinhood. I really don't. I really don't.
I understand a young person getting caught in the appeal of hey, I get a free stock. I want to learn new markets.
We got to stop saying that. And we need to point out bad behavior when bad behavior exists. You are trading with a company that literally is front running your trading data.
No,
you are not trading. They're not supporters of you. They're not. They don't want you to make money. They don't.
It's crazy to think
It's
about
crazy.
$10 million fine over all of those, all that revenue they've made over it. It does encourage the bad behavior, Matt.
Oh, are you kidding
100%.
me?
Yeah.
If I'm running Robinhood right now, there is nothing besides me calling up every hedge fund I can saying, hey, we'll give you a discount on premium here. You only have to pay us 65 cents per 100 option contracts instead of the 68 cents you were paying.
Yeah. Yeah.
And you know what? With all the activity at Robinhood, there's a reason Robinhood is getting more of this type of revenue coming into their business than other brokers are.
Mm-hmm. Mm-hmm. All right, boys, let's start wrapping this one up here. Maddie, why don't you give us some final thoughts here for the team out there? Obviously the markets are down. We've been talking about them here for a little bit. Since the halftime report, though, they are trying to find a little bit of slowing momentum, but that's typical midday in market pricing and action. Matt, last thoughts from you, sir.
Oh, that was my last thought, actually.
Yeah.
Don't trade at Robinhood.
Don't trade at Robinhood. Gino, what about you?
Yeah, market's a little volatile. The VIX is letting you know that, and it's telling you to keep your heads up. And if you have to lower your position size, that's a smart move because, like Mark said, don't chase this market by doubling down. It all comes down to risk in this marketplace, guys. Anytime you get a pullback, it comes down to risk management. That's what it's all about. If you got stopped out or whipsawed this week, you're not the only one. It's called volatility. Hey, look at the markets this weekend. You got 3 days to do it. Gives you plenty of time to look at our newsletter, our stock report, and our options report. Look at our archive shows this week and prepare for a great opening Tuesday, a whole new week.
Mm-hmm. Marky?
For the first time in 2 months, I have a different final thought, right? I've been rinse and repeat for a couple months, and it's been a heck of a run, right? We've made some money during this run. It's been a nice run. This day occurred. This is not the end of times. I really, really don't think, but that doesn't mean it can't lead to more volatility. My final thought is my advice to you is what I'm going to do tonight. I'm going to go look at my positions and come up with a concrete plan that if I get hit in the mouth again tomorrow, I know what I'm going to do. Think it out and not make a reactionary fear-based plan, right? A logical. For me, who sells a lot of naked puts, it's going to be like, all right, if we're down another 2-3% tomorrow, what do I need to roll down and out? What do I need? What am I comfortable holding? Am I comfortable taking ownership at certain levels for positions that I have? What's my plan? Did I sell a call today, which I did on certain positions, which is pretty standard in this situation on existing positions. But what is my plan? What am I going to do tonight if I get another day like this? And maybe we don't, right? Maybe the market's up 3% tomorrow, right? Maybe the Fed comes out and says, we can't have this nonsense. The market is not allowed to go down, and they do something to trigger the algos and the buying and everything's good tomorrow. No harm done then in that situation. But technical sell-offs can continue. And so we just need to be prepared and have a plan. And I would sit down tonight and come up with what yours is.
Yeah. Be prepared, have a plan. And I love the way that you've talked about this many, many times over the last year or so, Mark, how you like to do your planning when markets aren't open, because when markets are open,
100%.
the money is going up and down. The emotions are there. When markets are open, you should be executing plans, executing your daily routine, all that kind of stuff. Strategic planning, money management stuff. I think that has to happen in a detailed way after hours as well. My final thought is very simple here, guys. We'll be back tomorrow to see what happens with the market on the last day of the week. Obviously, we've been talking about the potential for something like this for some time, but what Mark just said a minute ago I think is right. It's been an incredible run. Let's see what happens next. Let's just take it a day at a time, try the best we can to keep the emotions out, because we all are human. We do have emotion. Focus on your trading plan, focus on your rules, and keep moving yourself forward one day at a time. There is a 15-day trial to our pro membership in the comments below. Like as always, if you're not yet a pro, come and join us. I believe Noah is going to be teaching our cash flow club tonight. And then tomorrow night, for those of you who are Tackle 25 members, we had a programming miscommunication last night. So we're going to be moving that to Friday night for the reschedule from Wednesday to Friday. So tonight, Cash Flow Club, 8:30 Eastern. Tomorrow, all of our regular programming, including the Tackle 25 at 8:30 p.m. Eastern. Until then, guys, have a wonderful trading day. We will see everybody tomorrow on the other side.